I was told by the agent the structure may or may not be financeable, and there's a DADU, aka a detached accessory dwelling unit in the backyard, that's not permitted. Now what do I do? This was a question I actually got earlier today. What do we do with a non-financeable product? And I want to buy it. And this was an owner-occupied, but this will also kind of apply to investors too. Let's kind of talk through this. One, I could get some type of a construction loan to be able to purchase this property to rehab it. Because if the main structure is not financeable and the secondary structure, the DADU, is not permitted, no traditional financing is going to apply. That don't work. So we can't get FHA, conventional, or VA financing. We're gonna have to look for a specialty product. Construction loan may be that product. A rehab loan may be that product. Private money from an individual may be that product. Hard money may be that product. But don't expect to walk in and buy something not financeable with a traditional, conventional, or FHA loan. How do I know if it wouldn't finance? It's always about the same things. They're looking for health, safety, functionality, and habitability. If you walk in and you see mold, that's not going to work. That's not healthy. You see a leaking roof. Well, that's a lack of function, lack of health. They're not going to finance it. Other things, cracked windows, missing paint on the exterior, so there can't be exposed wood. There can't be holes in the flooring or the drywall larger than the size of a quarter. There can't be massively missing flooring. Let's just say all the flooring is missing. Is that a deal killer? Not necessarily. A way to work through that would also be the rehab loan, to get a credit from the seller to make the funding a condition of getting that. Maybe we can get the seller to pay for it. Maybe we can go in and do it on our own dime and pay for it. In a market like Seattle, where things are very expensive, we have first-time homebuyers and investors that sometimes have to get really creative. And that's what we're doing with this one. We're gonna borrow private money from Dear Aunt Tilly. Dear Aunt Tilly is a made-up, fictitious individual in this person's life who happens to have $550,000. So they're going to borrow $550,000 from Dear Aunt Tilly. I realize this is a lot of money. They're then going to put another $100,000 into the property over 6 months. About $75,000 of that's going to go into the main structure, and $25,000 of that is going to go into the DADU, the detached accessory dwelling unit, to get the permit from the city on that one and to get the main structure financeable. The cool part is this is going to be worth about $700,000 once they're done with it. So if you could find a property, $550, and then you put $100 into it, and all of a sudden it's worth $700, they're going to make about 50, 60 grand in equity, a little more than 10%. For this first-time home buyer, that's a lot of money. That's amazing. And they're blessed because they have a Dear Aunt Tilly in their life. What happens is most buyers, when they hear no, they stop. Most investors, they stop. And I want to tell you that first no in a situation like this should be, I need to figure out a way to do this. I need to figure out a way to ask more questions. Because in high price markets or low inventory markets, or in situations where buyers don't have a ton of money, we have to get massively creative for them to be able to purchase homes and then create equity. So don't be afraid to make an offer on a property like this. And all you have to do is put in a longer financing inspection or feasibility contingency. So I'd recommend, if your normal inspection or feasibility contingency is 5 or 10 days, try to get 20 or 30 and then close 30 to 60 days after that. Because if I've got 20 to 30 days, now I can go get bids. Now I can work on finding the right person to fund me, or the right bank to fund me, or the right loan product. But don't just ignore the property. Go tie it up, go get it under contract. Just give yourself a longer time frame to solve the problem. This is one of these things we have done for 20 years. It's worked massively awesome. If you have questions about this process, drop it below. We're happy to answer for you. And share this video with someone who is thinking about purchasing and they don't quite know how to do it, or they're an investor and they need to hear there are ways to create equity without having all the money.